In the last few weeks, we've covered the big banks and their surging profits. Today, fund manager Perpetual Limited turned in half-year results, revealing a more challenging time. Net profits down 29% to $35 million, largely due to a couple of one-off charges. Underlying profits reflected a stronger half in the equity market, and particularly the private wealth business. David Deverill, Perpetual's managing director and CEO for 7 years, stepped down from the group's board today. I spoke with him a short time ago. David Deverill, welcome to Late Line Business.
Thank you. It's good to be here.
Well, your last report, are you happy with the results?
I'm pretty happy with the results. The underlying profits after tax are up 13% in what have been pretty difficult market conditions. Equity markets have continued to trend sideways. There's not a huge amount of investor confidence, so there's not much money coming to the system. From an investment point of view, and securitisation issuance has improved, but it's still well below levels that it used to be.
Yeah, I mean, a reasonably good performance of the funds, but as you say, there have been no inflows, and you need inflows. When do you see inflows coming back into the industry?
I think the inflows in the industry will start to come back when investor confidence improves. I think that investors are still recovering from the effects of the global financial crisis. It's forced them to think a lot more about saving and just paying down that debt. So what we've seen is continuation of compulsory superannuation contributions, but very limited voluntary contributions into super, and not much also in the way of investments in non-super. So we've just got to see investor confidence improve, and that will take time.
You had a $3 million hit for the costs of the KKR bid. You never got to a stage where you could offer a deal to shareholders. Was that just about the price, or was there something else?
Well, the original offer was non-binding, incomplete, conditional, etc., etc. And so as we worked through the deal with KKR, it became clear towards the end, for a variety of factors, that it just wasn't going to work. So we mutually agreed to part company.
And nevertheless, they were talking, 38 to 40. What strategies does Perpetual now have in place to drive the share price back up? Because you're in the low 30s now.
Yeah, so the share price at the moment probably reflects more the current market conditions rather than anything else. The board takes a long-term view of Perpetual. And as you look out over the long term, with the growth of savings that will take place in the years ahead, the likely improvement in equity markets and the continued development of capital markets, Perpetual, by dint of its strong brand and good market share, will benefit from all of that. And over the years ahead, I'd expect to see Perpetual continue to grow.
Now, a real jewel is your wealth management business, net profit after tax of $11.6 million this time. Could it be for sale at any point in the near future? I ask that because there'd be plenty of people interested, I'd imagine.
Yeah, the private wealth business for us is a fantastic business, and one of the key planks of Perpetual's expansion into the future.
So no.
It's I think the short answer is no. It's a core part of our strategy.
What do you see as your biggest achievement over the last 7 years?
Well, I don't try to reflect too much on the past, but the time I've been at Perpetual has been marked by two parts. The first is the boom run, and then the second part is dealing with the global financial crisis. And from my point of view, what I'm really proud of is the way in which Perpetual has come through the global financial crisis with 3 really strong businesses, with a fantastic brand, the envy of many of our competitors, and a fabulous team that forms all of that. So
do you think you're leaving now Perpetual in a better shape than when you joined it? Because obviously the share price is much reduced.
Yeah, the share price is one thing, but in terms of the business, I'm very proud of the strong brand, the very strong market positions, and the envy that Perpetual measures amongst our competitors.
Just on your international businesses, is there any lesson to be learned from Perpetual's global business being based in Dublin?
Not really from where it's based. I think some of the challenges for global equities as an asset class in the last few years is that as an asset class it just hasn't performed as well as the average retail investor would like.
Well, it's not making any profit. Is there a role for it going forward at Perpetual?
Yeah, absolutely. Global equities is a very important asset class for the Australian investor. As I mentioned, the performance of that asset class has been behind in recent years with sideways equity markets and the strong rally of the Australian dollar. But over the medium to long term, global equities is a really important asset class for all fund managers to be participating in, including Perpetual.
Right. David, there have been calls from the analysts today for a 100-day report from the new CEO. Is that enough time to get your feet under the desk? I mean, how did you feel when you started?
It's the famous 100-day plan. That's more of a concept rather than anything else. So I wouldn't say the analysts were necessarily calling for it. They were just asking for Chris as to how long is he going to take before he comes out with the strategy. I think the right thing to do in that is to do, as Chris said, which is to listen to people, listen to your customers, listen to your people, look at your competitors, and in the right space of time, make the strategic moves that you want to make. So the way Chris is going about it is absolutely right.
David Deverill, a lot of speculation about where you'll next pop up. I thank you very much. We'll leave you to your 6 months of getting your handicap down and trying to break that 60-minute barrier in the city to surf.
Thank you. I'll watch you cheering along on the sidelines.
Good on you.
Thank you.